and my stop is going to be down here below X. And it's going to look something like this. This is what the pattern looks like when it's completed. Okay. Okay, questions on the rules? Questions on where stops go? What if it breaks 127 downward and it breaks above it slightly and goes back below it? Is it still a valid entry? As long as it didn't hit target 1, Jason. I missed the stop rule. You're going to have to watch the replay. Where do we take profit? Well, hold your horses. Dadgum. How far below X is a stop? On the 15-minute chart, we default to a 10-pip stop. No, Scott, it would not be okay to do that. Any other questions? Do you take spread into consideration? I always front run my orders to make sure that I account for the spread. When you say 60 to 70% success rate for the Gartley, is it for both targets getting triggered? No, it's a profitable trade, Mark. We make money on the trade 60 to 70% of the time. Okay. What will invalidate a trade? Well, if you listen to my rules, and this is the thing, if you listen to my rules, you know exactly what invalidates a trade. What are the rules for A to B? It must do what? Touch the 618. And it cannot do what? It cannot touch the 786. So what invalidates, what would invalidate it from the first condition? Well, if it doesn't touch the 618 or it touches the 786, it invalidates the trade. What about the second leg of the move, B to C? It must touch the 618, cannot violate A. So guess what invalidates the trade? If it doesn't touch the 618 or it violates A. What invalidates the D leg? Well, if you are buying on a limit order at the 127 extension, nothing's going to invalidate it other than it doesn't hit the 127 extension. If you come into it late, the only thing that would invalidate it is if the market had already broken below X, right? Because then we wouldn't have a Gartley pattern anymore. Okay? As I said before, we're dealing with the wicks here. We're dealing with where the market touches. Again, guys, this is day one stuff. This is why I said that we use very specific terminology here. Higher high, higher close. Must touch is completely different than must close above. Break above, close above. Okay? If you are listening to me and you've been listening to us all week, we're very specific about this stuff so that there is no confusion, so that questions like that don't come up. Yes, Simon says, have these guys been here all week? Obviously not. Okay? All right. Do the rules apply irrespective of trend? Yes. Doesn't matter whether the market's bullish or bearish. When the pattern exists, we would trade it. Does it matter how long the D leg takes to materialize? No. Is the 10 pip rule for X all time frames? No. And there are several different ways that you can do stops. I'm giving you a I'm giving you an easy way without getting into ATRs or anything like that. I'm giving you a very simple rule for 5, 15, 60-minute charts. Okay. Yeah, exactly. Pascal said ATR question mark. That's why I didn't talk about it. Okay. Now let's talk about targets. Now that we're in the trade at the 127 extension, how are we going to find our targets? Well, we're going to take a Fibonacci retracement and we're going to go from A to D.